The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Here's another graph here that kind of shows how much of a pullback in real dollars, like CPI adjusted, inflation adjusted. Home prices of Canada have now fallen back to where they were February of 2017. So it's almost erasing all of the crazy COVID gains here. So it's dropped back down to the 2017 on this graph here. What do you make of this? Is it now the time to buy, Alex? This is a great opportunity to buy now. Welcome to episode 68 of the Canadian Mortgage Show, our last show of 2025. Alex Pang here alongside my co-host, Alex Shanks. Alex, we got ugly Christmas sweaters on.
What? We got our ugly Christmas sweaters. I know for anyone that can't see it, mine does not really fit me well. At least I can roll up the sleeves, but if I stand up, it looks as good as those Christmas girls wear. I mean, it's like a belly, like what are those?
A crop top.
A crop top. I'm not too sure.
Well, mine's is Bob Ross, baby.
Bob Ross.
That's ugly. But man, we are both sports fans. Something that we actually agree with, we're both Seahawks fans. So we're recording on a Friday. Yep. And yesterday, I would say it was the game of the year. Not because I'm a Seahawks fan, but literally it was an awesome game. The clash of the NFC West for the battle for first in the division and the number one seed in the NFC for you sports fans out there. Both Alex and I are Seahawks fans. And it was against the Seahawks versus the Rams. My goodness, honestly, I watched the entire game. Alex, you only caught how much of it?
Yeah, I was able to watch the end of it, and I mean, I was at the gym and some other stuff, and then I got home and told my wife, I'm like, I gotta watch this game because like I'd seen some news that they were down, and I'm like, holy shit, what is going on here?
Yeah. So for those of you who aren't sports fans, you could skip 5 minutes ahead. We're gonna talk a lot of sports in the beginning here. So we were down 30-14. It wasn't looking good, and honestly, I had to be honest. You know, some people said, oh, I had no doubts. I had plenty of doubts. I was like 30-14. Yeah. I'm like, oh man, the Rams are Sam Darnold's kryptonite or something. And, you know, wasn't doing well. And I almost kind of tuned out. But then Rashid Shaheed had a punt return for a touchdown. I'm like, okay, here we go.
And he's done that. He's already done that twice.
Yes.
Now. Like that's the second
he
one.
He did this a couple weeks ago against Atlanta, I believe. And this is after the trade from New Orleans. So he's been a great pickup. And the crazy storylines. So we're down 30-14 heading into the fourth quarter. But the defense picked it up in the fourth. And we scored 2 touchdowns. The first one we just mentioned, Rashid Shaheed. And both of them, we had 2 2-point conversions. And the NFL average of 2-point conversions, I looked this up, was like 48 to 55%, some of that. So it was really a 50-50 versus it's a 96% for the extra point. The second 2-point conversion, did you see the highlight of it? Like it was like the weirdest play. In the beginning, it looked like it was just an incomplete pass, failed attempt. But on further review, it was deemed a lateral. It was a backward pass. It went off the Rams defender's helmet. It landed on the ground, and we thought the play was dead. Zach Charbonnet just picks it up nonchalantly, thinking the play was dead, and just hands it to the ref. So on further review, that was considered a pickup. The ball was still live on a lateral, resulting in a successful 2-point conversion. Even the coaches were like smiling. We're like, I have not seen this in my life as a sports fan. Have you?
No, it was pretty crazy.
Yeah, and then it went into OT. Rams scored a TD first, and I'm like, oh shoot, we need to score at least another TD to tie it.
Yep.
So they went back the other way. They scored a TD, made some great plays going in, and we were all debating too. Shoot, if we tie this game, the Rams would get the ball back with 3 minutes to go. And we don't have time if they score whatever. And if we end up in a tie, it's not going to help us as Seahawks fans. They're still going to be ahead of us as a tie. So we need to go for the win as a 2-point conversion. And so they converted on a 2-point conversion attempt, 3 for 3 in 2-point conversions attempts. I'm like, that's the first time in history that the game, an overtime game, was won on a 2-point conversion. That was crazy. It was epic. I was scrolling through Twitter all night, and I was been doing it this morning. That everyone's like, we're still living on a high from yesterday.
Yeah, and I mean the coaches. I mean, the Rams coach that I watched his press. He's just like this is wild. Like what? Like how has this happened and everything? Which I mean, hey, but that's the cool thing about sports is sometimes it's all planned, and other times there is some luck involved, and the Seahawks got lucky.
Yeah, it was like the head coach for Seattle, Mike McDonald, when he was walking off the field after the game, he was like smiling and shaking his. He's like, "This is the wildest game I've ever been a part of," and it reminds me of Seahawks fans, 2015 NFC Championship, Seahawks versus Green Bay, when we were down 19-0 at the half. It was like a fake field goal for a touchdown, onside kick, and then we won in overtime. Russell Wilson to Jermaine Kearse in overtime and all that stuff. But that's not the only thing in sports fandom, folks. I'm talking about Canucks. Quinn Hughes got traded last week to Minnesota. It was like, best defenseman in franchise history. We all know he was like, we saw the writing on the wall. He wasn't going to resign. So we traded him to Minnesota. That came out of left field. And we actually got a pretty good haul for it. And, end up being like 4 first-round picks or 3 players who were former first rounders. And all things considered, we got a pretty good return. But honestly,
Is that just are you just trying to think of the good in their eyes? Are
yeah,
you
I
just
mean,
trying to make yourself feel better?
honestly, it was an indictment on ownership and management. I mean, we couldn't build a good team around him. Like I went to the game last week against Buffalo, and it turned out to be the last game of Quinn Hughes's Canuck career. And I got interviewed along with other fans on a fan podcast, and pretty much it was foreshadowing that he was pretty much gone. He was a great player for us. If he stayed his career, his number would have been retired. But honestly, he wasn't the greatest captain. He was kind of sulking, and
Yeah.
we can tell that he was mailing it in. But I think
Did you have a Quinn Hughes jersey?
I do have a Quinn Hughes jersey, and for you folks here, I do have this. I put up this artwork on Quinn Hughes. I don't think I'm going to take it down. I mean, he's still a Canucks player, like a former Canucks player. So I'll keep it on.
I thought it's the worst. All my Seahawks jerseys I have right now are all players that aren't on the teams anymore. The one I normally wear right now is my Marshawn Lynch one, or I'll wear a Tyler Lockett one. But like I have DK Metcalf, I got TJ. Like just so many players that aren't on the team anymore.
Yeah, I mean, I was thinking of getting a Seahawks jersey myself. They're all sold out at this point. Like my size, I'm a small. I was looking for Jackson Smith and Jigba, and they're all sold out. And I'm like, oh, I can get a number 12 fan. So that's one of the universal ones. So we'll see. I mean, my brother-in-law and I are talking about going down to a game if we get home field advantage and stuff. But yeah, that'd be good.
Yeah, well, let's start it. I mean, we're gonna jump right into the Canada stuff here, and we're gonna kind of go over. And I mean, this is leading to what happened last week. We know that rates didn't drop by the Bank of Canada. The Fed did drop, and now we got some more data this week. And Canada's inflation rate held at 2.2% in November, which I mean is in line. To me, I didn't think that we were going to be increasing substantially. The big thing was actually cool is finally mortgage interest rate isn't the main driver of inflation anymore. It's not on the chart anymore. It's now obviously rents and groceries are the really big one. This is the number that we really need to be watching, especially as tariffs do start to keep coming in. Are they going to be? Is that number going to be increasing? That's really what we need to be watching. And so, I mean, you could say it's good to go there, but we know that food is up. Like if everyone's looking at this on the video here, for their seasonally adjusted all items versus food, I mean, it's just been going up like crazy. And even the top food prices so far in 2025, you got roasted or ground coffee is up 33%. I don't fully understand why. Is that to do with the tariffs? I don't think so. Whole chicken is up 29%. Ground beef is up 21%. And like, I think we talked about this, and I would love to find it out because this is where I had a problem with all these companies back in COVID. They made exorbitant amounts of money because they increased their prices because they had to pay more for shipping. It made sense. They never cut their prices down when shipping decreased. And these companies, they're just making hand, foot, or mouth over here. Like, I would put money on it that maybe their costs have increased by 5%, but they're just increasing their profits by 15. Tell me your thoughts there, Alex, with like the price gouging and stuff. Do you believe that these prices have actually increased the amount that we're seeing for obviously the inflation, or is there some price gouging going on here?
Especially, we talked about this in weeks past, where Canada is a bunch of oligopolies. So who are the big food suppliers? Is it Loblaws, Weston? Um,
Yep.
I don't even know who owns Walmart, but it's just Walmart. But like Costco, they control the whole food market. So they can use an excuse of inflation and stuff to raise prices for no reason. And isn't there currently something going on with Loblaws about the whole bread pricing scheme where
Oh, they got
yeah,
sued. They
and
got
then
sued
people yeah, and
millions of
people
dollars. Yeah.
got
But I
to
mean,
submit a claim to get I don't know how much back from the whole like yeah, like
$6,
yeah,
like
you don't need to show
$6.
receipts, but if you bought bread from, so and so year to so and so year, just put in your name and stuff, and you might get $20 back or something.
That's kind of like I was thinking about that, Alex. I'm like been seeing other things about like these obviously like big legal firms that are suing and doing these massive things like that. But it's like, what does that benefit the everyday people? It's like, oh, cool, we're gonna get $6. But hey, don't worry, these companies they get to keep doing this shit. Now they just know how to hide it better. And so there's just no recourse. If me and you came on here and started trying to sell a course and we tried to rip hundreds of people off, we'd be in jail. Like instantly we would
Yeah,
go to jail.
yeah. But as we know from Canada, white collar crime pays. We get suspended from our
Yeah.
licenses or whatever, but maybe they have bigger fish. I mean, you can see here, like, hopefully our producer can put this up here, but the top food prices so far in 2025: roast or ground coffee up 33%, whole chicken 29%, ground beef 20%, and it goes on. But I can say for ourselves, we don't buy steaks and eat at home anymore. Like, I don't even if you go to a restaurant, like let's say for the keg, for instance, just like a 6-ounce sirloin, it's like $50. Like, oh my goodness, what happened? It's not like our incomes have gone up at the same rate. Certainly not. Our expenses have gone up, has just skyrocketed. This is just mind numbing.
It's pretty crazy. And I mean, this stuff like, and we have to remind people the way that inflation works is we're saying that, yes, it's at 2.2. We're not seeing those 10, 13% increases like, hey, we're winning. It does not mean that these prices are coming down. It just means now, ideally, on average, they're only going up 2.2% over year. But we can see right here, we compare it, is coffee's up 33%. Like, these are not small amounts. And that's kind of the issue with like the CPI is it kind of like hides certain things. It makes stuff look not that bad, saying, hey, it's only 2.2% in inflation, guys. It's not that bad. And it's like, well, we had fuel going down, so prices are lower there, but everything else is up, but it
Yeah,
offsets
I
itself.
mean, I'm not liking this. Like the previous graph shows that regular CPI is 2.2, but then food is. This almost looks like the housing graph, where housing prices detached from incomes, which this is not a very encouraging stat at all. So we shift gears here towards the housing here. The Canadian Real Estate Association here. Um, reported November home sales down 11% annually as the market hits its holding pattern. Now, this comes to no surprise for you, for me, for most of our listeners, our followers of the pod. But yeah, it just kind of goes to show like a majority of the numbers are BC and Ontario for sure. Now, if you want more regional, we've said this over and over again. Look at the local numbers. Even if you're in Ontario, you look at the TREB numbers, or BC, the BC real estate numbers. Even those aren't that accurate. You have to look at even the Fraser Valley. In yours is the island. I don't know what the island numbers.
It's got Vancouver
Yeah,
Island
and
Regional
then
Board. Yeah.
Okanagan or Greater Vancouver. So, and even that, even the region, you have to look at city specific, and you have to break it down to property type, whether it be condo, townhouse, or detached, and areas and all that stuff. So, I mean, this kind of falls with the temperature of how it's gone this year, where um, prices have softened, rates have come down, but job numbers haven't looked good, which means people still haven't, you know.
Yeah, that's what I mean. Like if I saw one post and I mean fixed rates have pretty much stayed stagnant. Like we had a little bit of a decrease. We were up a little bit higher to start the year. We thought they were going down. Now we're pretty much at the exact same number as we ended last year. There's been no movement on that. But again, I mean the news is going to say rates are down. Fixed rates are not down, variable rates are down. And so again, that's everyone has obviously been waiting for rates to go down. And now they're like, oh, well, rates haven't really gone down. It's just variable went way down from 6%. It's now on par with what a fixed rate
And then
is.
Alex and I were talking about this offline. We've noticed now a bunch of letters, even though that fixed rates have gone up, the discounts for variable are starting to shrink. So I think right before leading up to this 2 weeks ago, you can probably get something like either prime minus half to prime minus 0.75, something like that, around that range, depending if it's a purchase or it's a renewal and something like that. Now we're starting to see discounts down to like 0.2 or 0.3. What do you think that tells you, Alex?
I mean, it's again, it's the banks going for profits. And I mean, we saw it right away when everyone's like, oh, rates are going down. The Bank of Canada would drop the overnight lending rate, which would then in turn drop the prime rate. But what the banks would do, the lenders, they would just reduce that prime discount. And so really there was no difference. And that's really what we see when there's more push that maybe rates are going to go lower. It's just a one sign, does not mean that like variable rates going lower here. People don't take that as a, hey, Alex says it's going lower. But the sign that we see is like, hey, banks want to shore up some profits, so they reduce the prime discount, and then rates will go down, and it doesn't really
I
affect.
mean, historically, I've seen discounts from prime reduce is when the bank thinks that the prime rate will go down more. Now, this kind of goes against the market opinion about the odds of a rate cut are gone, and that the next bank announcement will be a hike in fall next year. But the fact that they are reducing now, even though prime hasn't changed for, I don't know, a couple of months now, it is telling me that they are preparing that prime will go down a little bit more. Like the whole initial, hey, job numbers are good, or you and I called BS on it. Remember, we called BS on it a couple of weeks, and it looks like it now coming into fruition. Where it looks like banks are seeing the same thing, that this temporary job blip is only seasonal, and we'll go back to being, the crappy numbers it was January, February, and March, and you know,
Oh, and I mean, US is like they're doing really bad. The hardest thing, and I've been digging more into this, is what's going on in Japan here with their yen. Right now, Japan is at 0% for their interest rates. There's talks that they're going to be increasing that by 0.75. Now, to us, 0.75 might be like, hey, I'd be fine to lend at 0.75. But a lot of people, they've been borrowing millions and billions of dollars from Japan. Even Canada, we borrow money from Japan, and now the cost of that is going to skyrocket. And so this is where there's just uncertainty all across like the economy, not just in Canada, but across the world. And that's where like we just have to watch the data.
I mean, why wouldn't you borrow from Japan if the interest rate was 0%? Like they want you to borrow their money, even if it's at 0.25. It's like they're giving money away.
Yeah.
So, yeah, I can totally.
Exactly. And so that's where we just need to watch that, because that's where it could again push the bonds up, which we know that, I hope everyone knows, though, that means that will lead to higher fixed rate mortgages. And it just kind of bases like the bonds are kind of front running what people believe the economy is going to do. And again, if that happens, does not mean the economy is doing good. But the debt from everywhere across the world is going to skyrocket. And the only thing that they can do is maybe drop interest rates, but at the same time, their hands are cuffed. And so like it's a weird spot.
We can mark this date down, Alex, as December the 19th. We are calling this. I'm calling this. You know how bonds went up 0.3% ever since the positive job numbers? As soon as the next Job numbers come out. Maybe it could be January, probably not January, probably February, saying that January the jobs are back down.
Yeah.
Bond yields are going to come right back down. And
Oh, yeah, I wouldn't. I would say like I would say January
yeah,
might
because
go
it'll
higher. Like I
report
could see
December,
January
correct?
going up.
Yeah.
Exactly. Yeah, but February, yeah, February is not going to be good. And we talked about it last time. Like you can go back and look at a 1 year time span of the bonds. They skyrocket at November and December, and
Yep.
then they go
So I'm
down.
calling it again. We'll see. Don't be fearful, folks. Yes, it is elevated now, but I can definitely see in about a month and a half's time it'll come back down when fixed rates come down. When the real job numbers come out.
Yeah, but I mean, we talked about this, and we're gonna do a recap, everyone of 20, like what me and Alex brought up in 2025 at the start of the year in 2026 again to talk about where we said rates are. I'm interested to know. My numbers I think were like fairly close to where we actually are that way for rates. I believe we're in a healthy market personally. I don't think that rates actually need to go down much. Like maybe variable goes down by one more. I don't think we need lower than that. It's like I'm fearful if that happens, like the market will pick up. But again, there's other things that we do have to
Yeah.
look at.
Prior to our prediction, it was kind of going align with what we were saying beginning of the year. But the big thing that kind of put a wrench in things is the whole tariffs. Trump got in the way, and
Oh, exactly. That's where
yeah,
that's again, like predictions are for everyone. Predictions are like a prediction. You could say, "Hey, I think I'm going to make $1 million next year." And what if I got hit by a bus and now I can't work? And so you have to take stuff on to me on a bi-weekly basis, especially in our economy right now.
so we'll see. I mean, we'll talk about what we think 2026 will be at in the beginning of January. So, segue into where we talked about the regional patterns here. Here's a post here from a realtor on social here that tracking the losses from the peak. Now, Ontario saw 2022 peaks, and places like Alberta, Quebec, and the East Coast were this year as the peak. But you probably won't be able to see this that well on the YouTube side. But the top of this graph here, the majority of it is GTA Golden Horseshoe here, with Durham being the largest at 32% pullback from the peak, which goes to show you that it shouldn't have gone up
Yeah,
that high in the first place. You know, like
yeah,
like
exactly.
I'm not sure about the time, like how long the Durham region is from Toronto, like probably an hour, hour and a half away. But you're looking at like houses that should be only 800 grand sell for like 1.5 or 1.4. Like, correct me if I'm wrong. I'm not familiar with the pricing out in the Durham, but we're talking about that. Like things have gone out of control in those areas and they pulled back since. So even in BC here, Fraser Valley is down 21.6% from the peak. And I've seen it too.
Yeah,
Being in the Fraser Valley myself, I've seen our home prices gone up like a lot. It went from like, geez, maybe it was like 1.3 at one point for our house, and it shot up to like 1.8, 1.9 at one point. We're like, what in the world? Our house is the same. We're not even the nicest house in the block. And and so you see Greater Vancouver, it's down because it didn't see as big a wild swings. Like what this is showing is the biggest pullbacks from the COVID highs are all the suburbs. The suburbs like Fraser Valley, GTA, and such. So the ones that seen the biggest highs seeing the biggest corrections here.
yeah, and that's I mean, again, every market's different. I mean, I bought in 2023. I actually thought I was going to lose money just based on everything. I was willing to pay it. Rates were higher and everything. Where I live, I've increased in value. Same thing as many other people. And that's just where every place is different. But I fully agree with Alex said. The ones that just had these crazy run ups that were just like, why is this place selling for $500,000 more? Just because people want it now. And people were getting scared of you got to buy today or you're going to lose out. And
Oh
it
yeah,
put a lot of FOMO.
FOMO is was crazy here. It's driven by greed and missing out, fear of missing out. There's another graph here that kind of shows how much of a pullback in real dollars, like CPI adjusted, inflation adjusted. home prices of Canada have now fallen back to where they were February of 2017. So it's almost erasing all of the crazy COVID gains here. So it's dropped back down to the 2017 on this graph here. Um, what do you make of this? Is it now the time to buy, Alex? This is a great opportunity to buy now.
I mean, in the right place, I think. I mean, I'm not in certain areas. I'm not buying an investment property right now. Like, I'm not buying an investment property in Vancouver, Alberta, like right now. But like, depending on where you want to live, you may find a really ideal home to live in. Townhomes kind of seem to be an okay sweet spot because you can sell them for not like maybe a little bit more, especially depending on when you buy. Now you get to be in that detached house. Um, Again, they're in Ontario, and maybe there's probably room for it to still go down more. Like we still haven't seen the bloodbath from all these pre-sale condos. Like it has still not been fixed yet. If we were like, hey, you know what? All the condos they've been sold, it's finally figured out. There's still hundreds of thousands of condos that have not been sold. And next year we have the larger renewal wave of the 1.5% interest rates on fixed rates coming up. And that's where people might have to sell at losses to be like, I just have to dump this. I
Yeah,
can't take this anymore.
we've long talked about how things are might get a little worse before it gets better, especially Toronto, um, and a little bit so in the Greater Vancouver area. Um, we are hopeful, but like Bregman Ogvinson was cautiously optimistic. I'm like, I feel like at best it'll be more of the same of this year. All tariff aside, like how things are going now, the economy, our housing is largely dependent on how things are going in the economy, especially with jobs and all that stuff. So it's very intertwined in that, right? Like even um, industries affected by tariffs, there are actually not that many. It's just like automotive, steel, aluminum, I believe food as well, I think. But there's not that many like industries, but it's all perception. And when perception drives fear, fear is what permeates and spreads, headlines, and it just goes through the economy and people's consciousness like that.
And I mean, it was one that I was like, me and my wife were talking again when we were in Vancouver. We were in an Uber, and he's a truck driver. He's been working in the steel industry for 15 years. And he barely gets 2 days a week right now. I was thinking about that. I'm like, how many people could this be affected? And let's say, hey, maybe they finally saved up. They're like, I'm gonna go buy that detached home. They finally got it. And then, hey, this year his income drops by 70%. Like that's like where some people are going to be substantially hit by this. And I mean, again, at least this guy, he's out doing whatever he can for his family. He's not just sitting at home being like, oh, I guess I just got to curl up on the couch as he's doing everything. But it's a scary to think that way. And I mean, even AI is going to start coming more for the tech jobs. Like we see layoffs. I'm seeing lots of people saying, hey, I'm in IT. I've been laid off. I was making 150,000. And those type of jobs are now going to be.
I even had another conversation with a client. He works at Weston Foods, one of the, like we said, one of the largest food manufacturers, processors, or whatever, distributors. And he's one of the managers. He got laid off as well after 25 years with the company. And so, of course, he's going to get a severance and all that stuff, and he's going to live off of for a little bit. But yeah, he's going to have to get up. He's going to have to, find something else, get back on his feet somehow. But yeah, it's job layoffs is like not focused on a certain amount of industries. It's affecting almost the entire economy, even government as well. So, yeah.
Yeah, this is the belief. Like per Stats Can, there are now 732,000 unemployed Canadians with high school or less education competing for only 269,000 jobs. Like that's a scary number. Then you get into 493 university educated people now only competing for 80,000 jobs. Like that's where there's just not the right. And I mean, I'll say one thing from this, people, I would go get in the trades. Like even if you spent money to go to university, you don't have a job, just be like, crap, you know what? I'm gonna go over here, go get in the trades. Like you will have a job if you're a hard worker
Yeah.
tomorrow.
I mean, this goes back to saying what we said before about AI is coming after the white collar jobs, the things that we thought that university, like thinking that university was the way to go in getting a high paying job. It's like, you know what? Now it seems like it's going to be shifting towards trades.
But I mean, even before AI, Alex, like I mean, you could say my generation got sold this fairy tale of like you got to go to school, you have to get a degree, like that's what you need, and people had arts degrees, all these different types of degrees. And what are you going to do for work for this? Like where are you going to make money? And that was even before AI was even there. It now makes it
Yeah,
even more bleak.
it's AI has become quite advanced, but it's hasn't come advanced enough to a point where when you need to call a plumber or electrician, AI is going to come in. Not that yet. So, I mean, the next generation of millionaires will be from trades, 100%. I'm calling it right now. But yeah, so we move on here. So there's some vacancy rates reports here from the Vancouver CMA. Like during the peak of COVID, that vacancy rate was less than like 0.1%. Yeah, it
It's like
was
point
like
one or something. Yeah.
you would when you were looking for rentals. Of course, this is tied into immigration and students and like the demand and everything. You were competing to find a place, and then um, renting out a place, like even as us as a landlord, we would have like 15 applications, and we had to pick a litter. And sometimes people jacked up the rent, or people offered more just to get in. Those roles have reversed now. The vacancy rate in Vancouver is 3.7%. Now it's the greater Vancouver area. It's the highest amount since the pandemic years. And we know that means it's going to be a renter's market for years to come.
Yeah. And this is where, like, going back to like when I talk to investors and stuff, and I mean, even again, you can talk about when investors were saying, oh, my 1.5% variable rate, this thing cash flows. The way that people were even adding vacancy, and some people don't even add vacancy into their equation when they're looking at investment. I'm like, we cannot look at these last 5 years. Like this is a blip. We got to go back 15. Like that's what we actually need to look at a vacancy rate. And those numbers of COVID like skewed the data too badly. And that's where, for me, I never look at rent prices from COVID and now. I look at back what it was 10 years ago and the vacancies and everything to say, hey, do these numbers work? What if this contracts even more? And we're probably going to see rents still going
Yeah.
down here more.
Even on the financing side, when we qualify for mortgages, a lot of lenders require that we account for vacancy either through a rental worksheet, or they don't count 100% of the rental income because they allow for that kind of buffer for vacancy, expenses, management, and all that stuff. And as a real estate investor, if you still exist out there, have that, when you're looking at your spreadsheets, have that amount for vacancy. Some lenders use 5%. I would say use 10% as a vacancy to give yourself that kind of buffer. So to protect yourself from the future. So now if you look at this graph here, yeah, the overall BC vacancy is, in the 3 to 3.5 range, and Vancouver being above Victoria there.
Yeah, CMHC's annual rental market report has Kelowna's vacancy is now sitting at 6.4%, up significantly from 3.8, which is Kelowna's been a place where everyone's like, oh, don't buy a pre-sale in Vancouver, go buy it in Kelowna. It's a great investment place. And it's like, oh, that's these numbers are, and again, there's a lot of like rentals out there, and this is going to make it like very great for people as renters. Like you are going to be a deal. And some people might be like, why would I buy a house right now when I can rent and I may be able to save
Yeah,
more
this
money?
kind of it's kind of like the perfect storm when the whole run up of COVID, where prices were getting out of control in Greater Vancouver and the Lower Mainland. So people shifted their money to Kelowna. I'm just talking about BC. Same thing, Alberta. People go to Kelowna for for traveling from Alberta. And if you tack on the whole ban of Airbnbs, Kelowna, I'd say half of the population or half of the housing there is Airbnb. And you choke that out, and whole job numbers. It's why we see the vacancy at 6.4% now.
Yep. And then I mean, this is just where like Canadian households boost their wealth to another record high of 18.4 trillion with supercharged financial asset growth. The weirdest thing is this market has been real estate has been going down, but investments have actually again been soaring again, which a lot of people like I mean, if you look at the graph here, like obviously 2020 to 2021, that was the biggest run up. It kind of was going down. Then it's gone back up again. And this is where I saw a funny meme though of like the US market, and it's just like it's five businesses just sending money back and forth between each other. And it's the AI and the tech businesses pretty much are ruling the market right now. And there's like five companies that have the highest market share of all the wealth.
This graph is kind of got me kind of like things that make you go, hmm. It's from Stats Can. I'm like, from all the reports that we talk about, housing going down, job losses mounting, da 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 da. How is our household wealth growing? Like our real estate isn't going down. Like, is it basically just stocks and investments? Because that's the only thing I see actually going up lately. And
Yeah.
I don't know about you. Do you feel wealthier? I'm like, I don't. We're all treading water here.
I mean, my investments have done weller and everything that way. And I mean, again, like I said, it's like I bought at a time, and if I would be someone in this stage that like I spent money even in 2023, and my net wealth has increased. And that's just, do I say it's luck? No, but I was willing to buy the stuff even if my net wealth went down, and that's just where you have to be content. I mean, a lot of people have made crazy amounts of money on Nvidia, then it dropped for a while. People lost hundreds of thousands of dollars. They're back up. The scariest thing, and I read something on Reddit, is like it's the younger generation. They're like, I had 30,000, I invested all of it, and I made 150, and then I lost all of it. And it's like, why didn't you pull out at least your $30,000? And it's this like steady hands, this meme from Reddit of you got a hold no matter what. And it's like, man, like you could have at least taken your 30,000 out. But now they're sitting at zero.
Yeah, I hate it when like when you see these posts on social that says, if you invested $1 in Bitcoin in whatever 2010, you'd be a billionaire by now. I'm like, sure, that sounds great in theory, but human psychology says that if it goes up, and even if like let's say you put $1,000 in, whatever investment is, you make 2,000, you doubled your money. Human psychology says is you're probably going to take that money out, right? And bank the profits and invest somewhere else. So like
There is crazy people though. Like, I mean, I've spoken to create. I had people tell me in 2012, invest in Bitcoin, Alex. It was at like 15 cents. I'm like, you're crazy. And they made already hundreds of thousands at that time. I mean, they're multimillionaires now. But like, there's something there's a screw loose in their brain to allow them just to keep holding and waiting. Whenever I'm doing an investment like that, I will let it ride. I'll take out at least what I put in and a little bit of profits, and then I'll say, hey, the rest of it I don't care. But these people that, oh, I should have invested in Bitcoin, like you said, for a dollar, they're never people that never would have held it. They would have put in a dollar, they would have made 500 bucks, and they would have sold it instantly because they would have been like, holy shit, I got
100%. Human psychology is like, I would have done that. I mean, now that same token, remember NFTs, those digital pictures that it's going to be worth a lot of money. Now, if you put your life savings in that, like the same way someone did in Bitcoin, would you still have your, $5,000-$10,000? No, it's just disappeared.
No.
Exactly.
Just
so for those who, the ones who think that they're like boasting about it on social, I'm like, nah, this is clickbait. I'm like, I think that I call BS on that. Most people aren't going to do that.
No, exactly. And that's the same thing you get for financial gurus selling stuff and everything. They probably hit it good one single time. And after that, like they can't repeat it. It's again, you could put the stock market against the best hedge funds in the entire world. The S&P will outpace them, but that is a very slow type of investment and you can't leverage stuff as easily. And that is why people do invest with actual hedge funds. But if you just wanted the guaranteed growth, you'd be better just to track the S&P 500.
100%. And now at the same time too, like stock market does see wild swings. So like, let's say the 100-year average is 10%. But what it doesn't tell you is that it's not 10% every year. Some years it's 40%. Other years it's minus 20%. And it goes through this huge, like you see those graphs where the ticker, it goes up 10%, but are you going to be able to be like survive the wild ride and the emotional roller coaster when that happens? Now, yeah, like I mean, I'm invested in S&P as well. That's something that that's correct me if I'm wrong for you, you know, in the markets here, people like I would equate that to more like a ETF mutual fund ish kind of investment where it's kind of the set and forget it, just let it ride for the the companies that have the strong fundamentals and such. So
No, and that's I mean that's the nice thing is with ETFs and everyone, like you can invest in something and it's gonna do an asset allocation for you. The hardest thing is back in the day, like these things didn't exist. It was only for the wealthy people. You could only even invest if you were wealthy. It's finally like ability to actually invest, but then you got like the investment firms like Robinhood that show people, hey, look at this. You can make $100,000 by doing option trading. Risk 100. That's where we've diverted. Like, hey, if people could just invest $50 a month, it would be great. But people want to do something
yeah,
crazier.
yeah. I believe that we need to talk about this here. Our population is now a place that we're contracting. Um, it declined by 0.2% in the third quarter of this year, with almost 77,000 fewer people in the country. And our yearly growth has flattened to 0.2%. Now, the biggest here is the decline of 176,000 NPRs, which means non-permanent residents. First quarter decline outside of the COVID era. So if you look at this graph here, everything is positive, and now it's like this graph is below the bar graph there. It's like I mean it kind of this report actually kind of solidifies what we already thought already with immigration being turned off and non permanent residents leaving, students leaving and all that stuff.
Yeah, this is where like we've just been on this pendulum swing of let's let everyone in, let's not allow anyone, and again, like it's going to become an issue. Like we do need immigration here, but we need to be picking the right people to come into Canada.
Ford has announced that they are writing down 19.5 billion of in their EV and investments. They're basically saying they're gonna stop producing the EV version of the F-150. They've tried. They basically are throwing their hands up. The CEO Jim Farley said they're canceling it. They're just basically saying they're not selling. The 50, 60, $70,000 EVs aren't selling. We're just following where the customers are going. So what they're going to do is I like they're going to follow what Toyota is doing and doing very well is that they're just going to build hybrids. And I'm just speaking for myself here. Like I think I would veer more towards a hybrid than an EV because of the whole range anxiety, is the whole like EV is good for local, but if
Oh,
like I don't want to have to worry about my power giving out, like I'm not making it to my destination, like having the gas part. So that's basically what they're pivoting to. They tried, it's the whole EV mandate that's not doing well, especially with climate and all that stuff. Hybrid is kind of the kind of the middle ground, like the best of both worlds. Mind you, having a hybrid, you have a battery and so it's now two things that can break down. So,
but I mean, like that's where Toyota did really well. Like their hybrid Toyota, like that, like the Prius has been amazing, and that's where like all these, I mean, they just follow a fad, and Tesla was able to do what it did not because that they were amazing like electric vehicles. It's just their marketing and everything, the price points that they were able to hit. Like Ford just tried to do it and sell these really expensive electric because it was the fad at that time, and it's like, oh shit, that didn't work.
100%. I mean, at the end of the day, too, like electrics are only good for mild climates. And if I know correctly, the only mild climate in Canada really is BC. It's different still in the States, you know, like along the West Coast here, it's more mild. There's a lot of EVs, a lot of Teslas. You're not going to see a lot of EVs out in the extreme climates like the prairies or Atlantic or even in the East Coast. So yeah, I can it's good that Ford has decided to be like, you know what, we're cutting bait or jumping ship on this one. And immediately after they announced it, their stock went up because you know what, shareholders would be like, thank you. Like we need to be profitable.
Thank you. Yeah, we're not bleeding money anymore. Well, I think we should talk about this one for BC, Alex, to kind of bring in some stuff here. Obviously, we still have all the land settlement stuff going on all across Canada. But here, David Eby has says his government plans to offer private owners of land in the Cowichan Aboriginal title area more than 150 million in loan guarantees amid fears about the impact of the ruling on their financing. Tax expert close to the case says they're going to need about 1 billion in loan guarantees. And so, I mean, depending on obviously what these properties are, it's an interesting thing. I mean, in a sense, like they could just give these things. I mean, are they actually going to give these people money, or are they just going to say, hey, we'll take that debt? And so it's, I don't know. They're trying to save face a little bit. It's not going to fix the problem.
Honestly, I don't see Trenton Ploy come on down the line for political. I don't see David Eby being long as the premier of BC. You know, like with this whole gong show going around. Um, I mean, what does this mean? Like, they are like, if the banks aren't gonna lend, they're gonna back mortgages, or are they going to guarantee to the
That's
banks so the banks can still lend? Like, I don't know. Like, are they going to be their own CMHC?
that's and
Right?
that's where I feel like they're going to do it to the banks to give them security, is my guess, is where the government is probably going to try and step in. Cause again, they don't, that's them not taking on that debt load. They're saying like, hey, we will back this, giving you it. But again, they don't have to fork that money out. And so that makes the most sense financially, or hey, like they're going to come up with $1 billion to lend out and then be in debt for $1 billion. I don't think they can do that.
You know, like, I need to dance on this very delicately. When David Eby made this announcement, he also gave a land acknowledgement at that time. And I'm like, I think we need to stop the land acknowledgements here because it's kind of started this whole land claim thing. You know, like, not to discount what's happened to First Nations Aboriginal people. Let's I want to be clear about that. Like, yes, that's happened, but by constantly doing land acknowledgement, it's basically opening the door for these land claims. I don't know if it's one equals the other, but I don't know. We're right now in a mess in BC, especially with real estate and what's going on here.
Yeah, and I mean, it's again, we talked about this like during election time of like, hey, you know what? It's really nice. Like finally, like, yes, maybe not everyone want the liberals in, but it's like, hey, we had certainty. Since that date, we've had no certainty. We're still sitting in a very uncertain world of what's going on with the economy, with us in the US, global, what's going on just directly in BC. There just feels to be so much uncertainty that it's the most in any generation of usually there's one problem. Hey, we got a war going on. Hey, we got this going on. There's stuff everywhere right
Yeah.
now.
I think this is about a good time to wrap up the episode here. Um, I want to take a time just to
Yep.
acknowledge our audience and our followers. Thank you for walking with us every step of the way. Some of you guys have listened to us, have watched us from the very beginning, or some of you have just joined us recently. We want to thank you for joining us. There are plenty of podcasts out there. Some the Joe Rogans, some sports, whatever, and you chose to listen to us to talk about housing, real estate, economy, and what's going on in the Canadian market, and especially in BC. Now, I mentioned this couple weeks ago. For those of you outside of Canada and the US, why the hell are you listening to us? But thank you.
What do you like about it?
But thank you. So yeah, I mean, I do want to like um, thank you for tuning in. We do want to provide value, hopefully some entertainment. I know we talk about our passions and stuff like that, but we are human being too. We talk about what we do, but we have lives, we have families as well. Um, but yeah, I hope for all of you to have a Merry Christmas, Happy New Year, and we'll see you in 2026.
Yeah, and yeah, same as Alex. Just thank you for everyone. Thank you for Alex for obviously as people probably know. You can see as Alex is kind of my podcast wife. He takes care of everything. This wouldn't run without him. So obviously appreciate that greatly, and appreciate everyone that listens, messages us, and knowing that hey, we are helping people and they're learning and growing. That just fills my cup. Like that's what I want to be able to give. Um, when we talk to clients all day, like it's great, we get to help them, but it's like, well, frick, if this one person asked me this question, there's probably hundreds of people out there. And so that's really cool that we get to help people on a massive scale. I know we may never talk to them, but they still are going to grow and learn from it. And I hope next year people just take it as like, let's grow, let's learn. And I hope we can all come connected better together. I feel that we're all so divided these last few years, and I hope maybe we can have some healing.
We're here to bring people together, not to divide. Before we wrap up, I know we talk about a lot of serious things about the show. We also like to have a lot of fun too. So our producer has put together a blooper reel for 2025. Enjoy, and we'll see you in 2026. Welcome to episode 67. Welcome to episode 66 of the. Welcome to episode 65 of the 64 of the 63 of the 62 of 61 of 60 of the 59 of 58, 57 of 56. 5, 4, 3, 2, 1.
Yes.
And then laid off 3,000 workers. I mean, like, what?
Yes.
Well, surprise, surprise. Shots fired. I'm like, I agree with you. So essentially, they took the money.
And guess what? What is each one of those banks doing, Alex?
They are laying off employees. I'm nowhere close to paying off my mortgage. Before she got into real estate, she was a professional Muay Thai fighter.
You can give Alex when you see him next time. You can give him a Muay Thai kick for cutting.
No, I'll be like, nope, I surrender. Just
That's all right. No, I'm not going to mess with Victoria on the street.
Alex, happy anniversary.
Happy anniversary, man.
Guess what?
Exactly.
We got some bevies on here. Let's crack it open. Let's do the virtual cheers. What's your bevy, Alex?
I'm drinking ginger ale and whiskey, but it's non-alcoholic. If there's any kids listening, we don't drink alcohol.
Yes.
And self-proclaimed Seattle Mariners fan, Brendan Ogdenson. Brendan, welcome to the show. I'm a Seahawks fan. I mean, I've only cheered for the Raptors when they had Vince Carter. I mean, we had the Grizzlies for 6 years, and I'm not cheering for the Grizzlies now, but I mean, my team's Golden State, so obviously Steph Curry, but I mean, Mariners, I mean, like, you know, I'm more on the BC than you know, it's not Canada's team, it's Canada's only team.
I don't care. This must be difficult that you guys are both named Alex.
Are we a Steph Curry fan or are we a Golden State Warriors fan?
Yeah.
Let's welcome Mayor Brad West. Brad, welcome to the show.
Thank you very much for having me, guys. Appreciate that intro. Well done.
You were saying offline, like, oh, don't say too much. I'm getting all blushed now.
We're not going to say, do we have to call you Mayor Brad or Mayor West that way? We'll say Brad.
Please do. I'll tell you, ever since I became mayor, there's been a long-standing Family Guy jokes about Mayor West. So Brad works very well for me.
Do you have kids, Brad? Have they ever called you Mayor West? Like, has your wife ever said, like, hey, go talk to your dad and say, hey, what are you doing, Mayor West?
Yeah, but usually more it's now bro, bruh.
Oh,
you know, we've
bruh.
been.
Yeah, it doesn't matter what you do. You could be the celebrity, like whatever. You could be LeBron James or whatever. You're still dad to them.
Yeah.
They don't care what you do on a day-to-day basis. Yeah.
If anyone's looking at the video here, I'm going to tell you right now, I'm not a ghost. I don't think I should look this way, but damn, when you're looking at Alex, his fair skin compared to mine, holy shit, I need to go on vacation and get some sun here.
Yeah, I'm like, damn.
And we've never seen each other face to face. We communicate over emails and phone calls all the time, but that's about it.
And before I met Mark in person, he's texting me like, I'm sitting behind you. And apparently Mark kind of knows what I'm look like. And then I look back, who the hell is Mark?
We came to Vancouver. I was already kind of short on gas. I'm like, oh shit, I need to stop. And I mean, there's just not easy stops in Vancouver to get gas. It's not like an easy spot, especially downtown. And so we were leaving our hotel and we were going to go out to Surrey to see some friends that way. And as we were leaving, I told my wife, like, hey, we need to stop on 12th Street somewhere for fuel because that's going to be our best stop. Our brains, kids screaming in the back of our car. Well, we came to the highway coming down through Burnaby. I'm like, oh shit, we didn't stop for fuel. You know, when your car has the fuel thing and says your range, well, that disappeared. I saw that, like, to get where we needed to go is going to be like 20 kilometers. I'm like,
I think we had like 30, 35. Like, I think we can make it. Well, that's if your car is just going at a normal speed, not stopping in traffic. My wife, I'm like, you gotta find like the closest gas station. Like, we have to go to a gas station now. And we started getting it in. We're like, all right, it's 1.5 kilometers away. I'm driving up a little bit of a hill. No. Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.